Analysts say that in the midst of the sovereign debt crisis, merging troubled banks would be the best option to avert widespread investor distrust. Well, meanwhile, Europe's financial officials are still debating on just how much detail from the stress tests they're going to reveal and how to manage the results when they do come through. Well, let's get some comment now from economist Bob McKee from Independent Strategy. Bob, thanks very much for joining us. It does seem that the whole reason behind this was to give clarity and to give investors confidence, and yet in a very kind of European way, it seems that we don't quite have either yet. These stress tests are about to be carried out. How much clarity do we have, do you think?
Well, I think next Friday we won't get a lot. I think we're just going to get the aggregate figure of how much they think European banks are likely to lose on the basis of the stress tests that criteria that they've announced already, which is basically saying you have to have 6% common equity capital ratio, and stressing against how, if growth is much lower than it would otherwise appear to be in Europe, how much that would hit the banks. We're going to get probably an overall aggregate figure, and that's all. We're probably not going to get an information about how that's been worked out, what the exact criteria are. That's probably going to be released over the few weeks after that as we go into August, bit by bit, possibly by each national government's banking regulators rather than by the European Banking Committee.
So I take it that this kind of drip approach is in order to prevent any sort of panic or finger pointing or whatever, and to kind of lessen the blow. Is that?
I think that's the idea. I mean, obviously the risk is that analysts and markets are going to say, well, you've got to give us the information, otherwise we can't really judge whether this has been a really adequate stress test. We know, for example, that there are going to be criteria related not just to growth, but also to the sort of assets being held by the banks, and including sovereign debt, at least for some countries. Apparently, the German government doesn't want any stress test on sovereign debt, while the Spanish are very keen on it because they want to clarify the position. And as you know, they're actually merging their savings banks now to try and have a stronger banking sector and sort this out.
Is this one of these classic European issues where it actually becomes weakened because, you know, the Germans don't want everyone to know how much sovereign debt they're holding in countries like Greece? Everybody has got a different viewpoint, and so actually what it turns out to be is something that doesn't do what it was initially supposed to do, which was to give us all the kind of information that that investors need in order to actually show which banks are succeeding.
Well, Andrea, I think that's the fear. So we won't know for certain until we go get the more detailed information as we go into August. As your introduction showed, there are various estimates about how much banks will have to raise. Probably the European Bank Committee will probably think it's around about 20 billion euros. A more serious stress estimate will be closer to 85, 90 billion, which would basically force, I think, national governments to intervene to help out over at that sort of level. But it does depend on what sort of test. Take, for example, the question of sovereign debt. One argument is that as most of that sovereign debt is going to be held to maturity by European banks, they don't need to stress test that part of the sovereign debt. Only the bit which might actually be sold into the secondary market should be marked to market. And that's probably only about 20%. Right. So if you don't stress test 80% of the sovereign debt, you get a completely different figure. Of course, and obviously then if you're not stress testing the debt, you're also assuming that there won't be any kind of a devaluation on the debt, or there won't be any kind of restructuring of the debt. Right. Indeed, so there'll be no which we don't know. We don't know. So we won't know how much haircut has been built in, whether all the debt has been stress tested or just part of it, and what sort of criteria are being used by different national governments. And all that will take some time to be revealed, I think. Yeah, so do you think we're actually not going to know the true picture of these stress tests until what? And the end of August, I think, before we'll find out the full position. I think they'd like to put it out during August while perhaps some of us are on holiday, so we don't take too much notice of it. Classic. OK. Bob, thank you very much indeed for coming in.